You get back to the charts and you see this, right? A new trade that you made money on. This is impossible without this thing called technical analysis, and we call it proper, accurate technical analysis. And if we are talking about you being profitable, right, not just one or two times, but consistently, week after week, month after month, then you need to know and understand exactly what is technical analysis, right? The right way, step by step, in a sequential way, right? So in this video, I'm going to help you become even more profitable when you use technical analysis, which is pretty much looking at a particular chart of any stock, any asset classes, and giving you an opinion whether should you pull the trigger, should you buy or sell the trade, or should you just do nothing. All right, and that's exactly what we'll cover today, right? For you to become a profitable, consistent trader, make sure you watch this video all the way to the end, right? So that's why I'm going to break it down for you in terms of what technical analysis is and how we, right, and you, right, can use it to your advantage in the markets. So I'm going to list out the steps, right, one by one. There are a total of like more than 5 steps. We go to talk about step 1 first before moving on to step 2, step 3, and of course we look at some live case study as well to break it all down for you. Let's go. All right, so the first step, right, the very first step that you want to do when you open any single chart, right, is to look at it and see it in perspective, right? So one thing about technical analysis, if you are totally new, is that technical analysis is about looking at the charts, and we believe that these charts right over here, like look at this stock right over here. This is CrowdStrike, one of the stocks that we caught for since last year, started to see a really good rebound, and from the charts, these prices or these lines or the candlestick, they are not just moving up and down randomly without any pattern. No, right? We can actually deduce some pattern from it, and based on this pattern, based on past prices, right, we are able to kind of like predict, where the stock can potentially go. All right, is it more of it going up? Is it going down? Maybe it's moving sideways. That's how, just by looking at the past prices, we can kind of like deduce whether to take the trade or not. And that's exactly what technical analysis is, right? Of course, if you're a fundamental analyst as well, that's where you look at things like what we call fundamental analysis. So nothing wrong with that. It's kind of like looking at a company's income statement, revenue, balance sheet, and all that stuff, right? 50, 60 pages of reports, and you form a view of the company in terms of the intrinsic value, whether is it worth to buy, right, based on the intrinsic value and the current price. So there's a little bit different, there's a different school of thought, but for technical analysis, I like it because it's a very direct way of looking at a stock, right, whether to buy or not to buy. All right, you get it, right? Whereas for fundamental analysis, everybody have different way of analysis, and that's where you come up with different intrinsic value, and that's the reason why it's a little bit more subjective, right? But for technical analysis, I think it's a very direct, very straightforward kind of way, and that's the first thing that you want to do, right? So the step number one of technical analysis is that you want to understand what exactly is a market structure. So what is a market structure? Well, essentially, a market structure would be to look at the stock and see whether, is it forming what we call higher highs or higher lows, or maybe lower highs and lower lows. So you can see right over here, like for this stock, CrowdStrike, previously in 2023 to 2024, right? That is a structure, right? It swings up, down, right? So you can see that it forms slightly higher lows, right? Higher lows and higher highs as well. So same thing, a higher low. So it was a bit of an uptrend, I would say, if you're looking at it, right, from a longer term perspective, right? So that's what we call market structure. We're going to take a look at if the stock is forming higher lows or higher highs. And if I can draw, look at this, right? I can actually draw this line right over here. That would be what we call something like a channel support line, pretty much connecting the lows that I have just drawn, right? So, based on these lows, we can draw a line that is sloping upwards that connect the lows, right? And, based on this line, you can see that we are pretty much in an uptrend. Of course, if we were to break down below this channel support line, then there is what we call a break of structure, right? Because, by right, it has been supported above this line, right? So, if it goes up here and rebounds and goes up and rebounds, that's a good thing, right? But no, right, it didn't happen, right? It started to break down this channel support line. So that's what we call a break of structure, and that's where we could potentially see some weakness, a retracement downwards, right? So that's a break of market structure, right? And just by drawing this line, you can see that we have kind of like turned a little bit of an uptrend to a bit of a downtrend based on this break of structure. And of course, after breaking this structure, you can see we sold off, and then for like a month, we hit it to a low, found a bottom, and over the past 3 to 4 months, we have found a bottom, and we saw again higher lows. Does it make sense, right? So that's where we are starting to see the structure pick up again, all right? Instead of going lower and lower, we found higher lows, and based on these lows, now we can, same thing, draw another upward sloping channel support line, something like this. You can see, right? So I'm not too sure whether these two lines are like parallel, but you can see that it forms what we call higher low. So now, right, it has turned back into an uptrend because we are forming what we call higher low. So the first thing about technical analysis is to understand the market structure of a particular stock. You want to buy a stock, right, when the market structure is bullish, is positive, right? It means the stock is forming higher lows, right? First of all, higher lows. That means it has been supported pretty well. Each time it retraces back down, it goes even higher, all right? And it retraces back down, it goes even higher, all right? It goes back down, it goes higher. So each time it comes back down, right? It does not just go all the way down. And I mean, of course, this is what happened over here, right? It broke the support, this channel support, and went all the way down. But after that, you can see, right, based on this 3 to 4 months move, right, that's where it started to just trade down a little bit and push even higher, all right? And that's where buyers are coming out to support this stock as it just dips a little bit and they push it even higher. So that's where the market structure is bullish, right? And when we see that, right, we want to think about taking a trade. So step one, all right, and that would be what we call market structure. And if you want to break it down a little bit more in terms of market structure, well, I would say that we can, all right, take a look at market structure in terms of the longer term trend, right? Longer term trend of a particular stock. So I mentioned, right, we want to take trades, in terms of it being in the same direction as the longer term trend or the market structure in the long term. So just by drawing these two lines, we can do that. Or what we could do is to also, right, turn on what we call the simple moving average, right, for this stock, and we can turn on, all right, the 200 days moving average and the 100 days moving average. So this is what I have on my One Good Trend Pro indicator. If you want to find out more, you can attend one of those free webinars. The link is right below the video. Click on it, register for a free webinar. But essentially, it's the same moving average that you can search on an indicator, pull it out, the simple 100 days moving average and the 200 days moving average. Right? You can see right over here. So I've turned on what we call the 100 days moving average, the red line, and the blue line. So you can see, how do we know if the market structure is up or down? All right, just by looking at the moving averages. Well, you can see that the 100 days moving average line is pointing up, all right, and the blue 200 days moving average line is pointing up. So when the red line is above the blue line and both of them are pointing up, well, that is another way to look at the market structure, whereby the market structure is bullish, all right, and the longer term trend, all right, in terms of this market structure, is up as well. Very simple, right? So you can see we have been in an uptrend, like from here when I drew the this upward sloping channel support line, right? Does it make sense? Right over here I drew it, right? Because I've kind of like deleted it, but it's the same thing, right? We are seeing the longer term trend pointing up from here all the way to here, right? Right over here we broke down, and you see, right, the red 100 days moving average line crossed below the blue line. So a bit of a turn in trend in the longer term, a break of structure, all right? But over the past, I would say 1 of a month, you can see that the 100 days moving average line, the red line has crossed back above the blue line, and of course both of them starts to point up again. But that would be another confirmation of a bullish market structure of the longer term trend turning back to bullish, like what we've seen over here in 2023. Right now, that could be the start of a longer term uptrend. Does it make sense? So that is the first thing, right? Market structure, looking at the longer term, all right, looking at the over the past 6 months to a year, where are we forming higher lows and higher highs? If we are doing that, there's a bullish market structure, there's a longer term uptrend, and we want to think about buying stocks like this. All right, so let's move on to step number 2, right, in terms of technical analysis, right? So now that we have understand a little bit on like market structure and the longer term trend of a particular stock, we're going to move on to the next part. And step 2 would be the trend in the short term. So when we look at trend, right, people tend to mix it up, right? People look at the trend as if it's like the entire thing, right? But we have what we call the longer term trend, which I covered in step 1, the market structure. And we have also this thing called the short term trend, right? The short term trend. What do I mean by short term trend? Well, essentially the short term trend is where we want to look at the trend of a stock over the past like 2 weeks, 3 weeks, up to a month, right? So it's more like a shorter time frame, right? And it gives us an idea of if the short term trend is actually up or down, because in the longer term, let me just go to show you, right? In the longer term, all right, like this, right over here, the red is above the blue. This stock has been in a longer term uptrend, red above the blue, both pointing up for about a year, all right? But is it always the case whereby the longer term trend is up and the short term trend is always up? No, right? Because in the longer term, it can be up, but in the short term, maybe like 2 weeks or 3 weeks or a month or two, right? The short-term trend could actually turn down. Does it make sense? So let me show you what I mean by, looking at the short-term trend. So now we can just pull out another moving average. All right, and this is the One Good Trend Pro indicator, but it's the same thing. You can just pull out the 20-day simple moving average right over here. I'll just turn it on, and you see right now that I have a green line on my chart. So the red and blue is the 100 days and the 200 days moving average. This green line, on the other hand, is the 20 days moving average. So I mentioned, right, in the longer term, it can be an uptrend. The market structure could be bullish. That's what we talk about in step 1. But step 2 is where, when the short-term trend is down, right, just by looking at the green line pointing down. Look at this right over here. Look at this. The green line starts to point down. Does it make sense right over here? That is where the short-term trend is down. All right, even though the longer-term trend is still up, but the short-term trend turns down. Does it make sense? All right, so the key here is that, when the longer-term trend is up, I mean, the red is above the blue, the market structure is bullish, right? But the green line starts to point down, the short-term trend turns down. Should we think about buying? I mean, should we just buy, because the longer-term trend is up? Or should we wait until, both of them starts to turn up? All right, I mean, not both of them, but essentially, the longer-term trend remains up and the short-term trend reverses from down to up. And then think about getting it. Does it make sense? Should we wait for that to happen? The answer is an absolute yes. So look at it right over here. If you think about getting in right over here when the short-term trend turns down, you can see it starts heading lower, 1 week, 2 weeks, 3 weeks, 4 weeks, and it pushes down by about 5 to 10%. But once you wait for it, right over here, right, to get back in again, when the green line starts to turn up, look at this, right, the reversal happens. So same thing here, all right? Longer term trend might be up, right? But you could see that the green line, 20 days moving average, started to point down. So if you get in here, you get stuck, right? Get in here, you get stuck. It goes cheaper. You get in, it goes even lower, right? So we don't want to buy when the short term trend is down, right? We only want to think about buying when the 20 days moving average line has turned back up. Something like right over here. Could you see that the green 20 days moving average line started to turn up, and that is all the way, it starts to point all the way up. All right, and that is where when both the longer term trend and the short term trend is up, it's like two confirmations that we are in the same direction. It's not just the longer term trend as the market structure, but also the short term trend, right? So would it be even easier to be right? To take a position in the same direction as a trade? Definitely, all right? So you can see right now, if you take a look at this stock, the longer term trend is up. Look at this, right? The 100 days moving average is up, the blue line pointing up. The short-term trend, you can see it was a little bit sideways, like the green line was sideways, so it means a bit of a consolidation in the short term. All right, and now the green line started to point up, right? So good, right? We are in a longer-term uptrend and also a short-term uptrend, right? So that is step number 2. We want to be in the same direction as both the longer-term trend and also the short-term trend. All right, so let's move on to step number 3, all right, as part of technical analysis. So one thing about technical analysis before we talk about step 3 is that, in technical analysis, it can be really confusing. Why? Because there's just so many things about technical analysis, right? And what do you want to look at first? All right, there is a candlestick, there's a price action, there's chart patterns, there's indicators and all the stuff, right? And, one of them say buy and the other say sell, and what do you do, right? There's like so many confusing or conflicting information. They call it analysis paralysis, right? So one thing about technical analysis is that not about you using every single thing and just combining everything together and then hopefully everything works, but essentially it's about using the right steps, right? The right steps. And the key here is the sequence of using them, right? So the sequence of using them. So you can see right over here, we talk about the trend first, or we don't just jump into like candlestick or some other funny indicators. No, we talk about the trend first before we move on to the next step, right? So, and that's exactly what you want to do. As I say, right, if you want to find a bit more on the entire strategy, right, the One Good Trend, 1GT strategy, just click on the link below the video, attend all those free webinars whereby I'll share with you guys a little bit more as to how do we actually filter out the top 1% of winning stocks, right, before knowing exactly when to buy and sell them and be guided based on the bullish or bearish signals that we see on my 1GT, the One Good Trend Pro indicator. Later, I'll turn it on for you to share with you guys on what it says on this particular stock, but that's after doing all the analysis. But so you understand the framework behind it. So you want to find out more, attend all those free webinars. The link's right below the video. All right, so let's move on to step number 3, right? So step 1, the market structure, the longer term trend, higher lows and high. Step 2, the short term trend. I hope you got that. We look at the 20 days moving average. Step 3, what exactly is step 3? Well, so let me just go to remove all the drawings right over here. And step 3 would be simply just by looking at what we call the horizontal support and resistance. So most of the time, we want to try to time our entry near a horizontal support and resistance level. So it gives us an idea of where exactly is the buying and selling pressure happening. So let me give you an example. So you can see right over here, right? I can draw a horizontal line like something over here. So you see this is a horizontal line, right? It's a horizontal support level. So right away you can see, right, prices start to rebound, it rebounds, it rebounds, and rebounds. So that's a support, a horizontal support level whereby we have been holding for quite a while. So if we were to near this horizontal support level, and of course the longer term trend is up, the short term trend is up as well, that is where, right, there's a higher potential for you to see a rebound, and that's where a potential entry can be taken, right? So for example, maybe over here as well, look at it, right, something like this, right? So that is where we saw a bit of a resistance pump, we broke it and it became a support. So that is another higher support level, and you see, right, the support actually became higher and higher. Look at it, right? So there's another support level with consolidating pump, right? So the support actually got higher and higher. In fact, I think it's gone even higher. If I can draw another support line, maybe right over here. Look at it, right? So it's a bit of a resistance, went up, came back down, and over the past 2 weeks, we broke above the resistance, which became a new support level. Does it make sense? So now that would be a new support level. So we want to think about getting in, of course, when both step 1 and step 2 is met, right? When both the longer term trend and the short term trend is up, then we want to think about getting in preferably right near a horizontal support. So if we were to dip, like for example, right over here, maybe 380 to 390 would be a horizontal support level. So if we were to dip right to near the horizontal support, that's potentially where some buying pressure can come back, some bargain hunting can return, and that's a good trade setup with a higher reward to risk ratio. All right, and that's where you could think about getting in. All right, on step number 3. So just by drawing this horizontal support and resistance level, it gives you an idea of where we are. Are we like pretty far away from the support level? Are we in the middle of nowhere? Are we near a resistance level whereby some selling pressure is actually coming back? So that gives you an idea on where we are. So for example, right now I would say that support will be near that 380 to 400. What about the resistance? So resistance wise, we could actually draw another line, maybe somewhere around the 400 and let's see, maybe 450 level, right? How do we get like 450? Well, we could kind of like get a range of a consolidation. So previously, right, for about 2-3 months, you can see that we were consolidating sideways in this range, right? And after breaking this, 400 to 390 resistance, we could kind of like project it, I think, somewhere over here, and that could give us an idea of the next upside targets, whereby some profit taking may come back again, right? So if we were to hit near that resistance level, that is where potentially we can also think about taking some profit. Nothing wrong, right? Take some profit, put some money in your pocket, and we can think about maybe getting in again on dips, right? So just by drawing this horizontal support and resistance, it gives you an idea of where could the potential entry be, maybe where could selling actually be as well, all right, as it hits to those key resistance level. And that would be step number 3. All right, so let's move on to step number 4. Right? Step number 4 is part of the entire one good trend strategy, and we talk about horizontal support and resistance in step number 3, whereby I mentioned that the support actually became higher and higher. So that's a good thing, right? So horizontal support pretty much connects the lows. Look at this is a low, the lows, the lows, the lows. So the lows got higher and higher. So the support actually became higher and higher, the horizontal support, right? So step number 4 is where we actually look at another type of support, right? So this is not the horizontal support anymore. This is what we call the trailing support, right? Trailing support. So let me just show you what I mean, right? And that would be another confirmation, all right, whereby a potential entry could be taken, or is it bullish or bearish? So let me show you what I mean. Let me just remove all the lines right over here, all right? And you can see that we are back to this chart over here. So I can go ahead to turn on, based on the 1GT Pro indicator, all right? This thing called the trailing support and resistance. Let me just turn it on, pump, right? In fact, let me just go ahead to turn off all the moving averages that I turned on just now, step 1 and 2, right? So let me just turn it off. So it's much clearer, and you can see that now we have this trailing support line. So what exactly is a trailing support? So let me give you an idea. Let me just go back to previously, right? So you can see that a trading support based on this green line, it moves up, flat, up, flat, up, flat. And as the name goes, right, trailing support. Trailing means you are like following, right? You're kind of following the prices as it moves up. So this trailing support accounts for the volatility of the stock. So if the price moves up, it moves up. If it's very volatile, it's, we give it a bit more allowance, more space, more breathing space, right, for it to move up. All right. And as long as the price were to stay above the trailing support, like what we see over here, then we are in a pretty good position. I think it looks pretty bullish because, as I say, right, this trailing support gives the stock space to hopefully move higher, right? So if you're above it, you're good, right? But if we give you space and then you should stay above, but yet you go below it, you break below the trailing support, like what we see over here, and then it might be a bit shaky. We might see a bit of resistance, a bit of selling pressure coming back. Does it make sense? All right, so that is where we can look at a trailing support. So you can see, right over here, we broke the trailing support. A trailing resistance pops up. We move up a little bit. Another trailing support. And look at this, right? We broke down the trailing support all the way down. And there's a trailing resistance. So a trailing resistance is just the opposite, whereby, if it goes down and down, especially if a stock is moving down and down in a downtrend, all right? Bearish market structure, downtrend, short-term downtrend, and we see a trailing resistance just following the price as it goes down, then you want to be careful, right? That's where it is a really bearish stock, all right? But if we do see a bit of a pullback here and a trailing resistance pops up, it follows it as it goes down. But one fine day, we stopped going down, we found a bottom, and we attempt to break above the trailing resistance. Great, right over here, that's where it turned back, it flipped from a trailing resistance to a trailing support. Look at this, right? This trailing support has popped up, right? So it's flat, up. So it pretty much follows this stock as it moves even higher. Does it make sense? So as long as you stay above it, right, we're giving it space to hopefully move higher, we can ride it some more. All right, so what's the difference between a horizontal support and a trailing support? Well, as I mentioned, right, step number 3, we talk about horizontal support, whereby we just connect the lows. Nothing wrong with that. I mean, it's just that there's no allowance, no space. It doesn't account for the volatility, right? But for a trailing support, as I mentioned, right, we're using this volatility tool as well, right? And a trailing support is kind of like a few multiples below the price, and we want to give it space to move higher. So by giving it space, you can see that prices are mostly above the trailing support. If it's low volatility, then the trailing support is even nearer. All right, so I think give it space, and that's where I think it's so much more powerful, just by focusing on the trailing support. So we want to think about getting in, preferably right near a trailing support. As I say, right, the trailing support might be a little bit lower. Like just now, we talked about like a support potentially coming in, maybe near the look at it, right, maybe near the 390 to 400 level. That is from the horizontal support level, all right, based on what I've drawn. But the trailing support, you see, right, is slightly lower. Right? Why? Well, because it gives it space, right? So there's more allowance given, all right? And that's where trailing support is lower, all right? And preferably, as I mentioned, right, we want to try to get in near a trailing support, because that's where it's a bit more attractive. Prices are a little bit cheaper, or of course, if step 1 and step 2 are all met as well, right? So the trend, the short-term trend, everything is fulfilled, right? That's where we can think about getting in near a trailing support. But doesn't mean that you want to get in near a trailing support, or you want it to go down for you to buy, means it will go down for you to buy, right? No, it doesn't, right? Sometimes it might just go up and up, it might just go down a little bit and it goes up, right? So preferably near a trailing support. If not, then we may also think about getting in near a horizontal support if possible. If the stock is strong, it doesn't really retrace down that much, right? So that is how step number 4, we use this thing called the trailing support level. As long as we stay above it, we're bullish. We want to think about riding it further, giving it space to move even more, all right? And we could take steps to protect our profits as we move higher. We could raise our stop loss following the trailing support as well, maybe taking some profits near a resistance level as well. All right, so let's move on to step number 5. So step number 5 is pretty much what I just talked about very quickly at the last part of step 4. So I mentioned about potential entry levels. So where could potential entry levels actually be, right? So first thing first, we want to think about getting in terms of a more conservative approach. Conservative entry would be, as I mentioned, near trailing support level, or maybe near a horizontal support level in an uptrend, when both the longer term trend is up and the short term trend is up, right? Another aggressive entry would be if we were to break what we call a horizontal resistance level. Like for example, look at this right over here. That was where we saw a bit of a resistance here, a bit of a resistance level. You can see, right? A resistance, we came back down. And if we were to break the resistance, right, that is where, all right, we could see even more upside momentum. So as long as we stay above the trailing support and we break an horizontal resistance level, well, that could be a more aggressive entry. Prices might be a little bit higher, but that is where we get a few other confirmations as well. We could also start to see the stock moving up higher fast as well, right? So that could be a trigger of more upside momentum, and that could be another entry as well. And that's step number 5. All right, so before we talk about step 6 and 7 very quickly, let me just do a quick run through, right? And you can see that, let me just go to turn off everything and very clearly, and I could also turn on what we call the moving averages now, right over here. I could also turn on what we call the buy and sell signals. Look at this, right? So based on this one GT Pro indicator, all right, okay, let me just turn off the trailing support and resistance, and I could turn on the buy and sell signals, right? With a click of a button, pump, right? And it gives us a quick opinion on any stocks, any asset classes in seconds. So I just turn it on, all right, and there we go. So you can see, right, we actually had a couple of bullish signals, one GT signal right over here all the way up, and we got a bearish signal. Bearish signal is sort of two bearish, and look at this, right? It starts coming down, 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 all right? A new bullish signal, the green 20 days moving average line pointing up. Remember the green 20 days, the step 2, right? It starts to point up, another confirmation, and we start pushing higher. Another bullish signal here as well, all right? So maybe let me explain to you now that, why are these bullish signals actually coming out? So let me turn on what we call the trailing support and resistance, which I've shown you just now in step number 4, right? So we got a bullish signal right here because the trailing support pops up. We actually attempted to break the trailing resistance, right? And what about this bullish signal that pops out? Why did this bullish signal comes out? So remember, right, in step number 5, right? Step number 5, I talk about, if we were to be above a trailing support, we are in an uptrend, and we were to break what we call a horizontal resistance, right? That is where potentially may trigger even more upside, right? And let's take a look at this, right? Did it actually break a resistance? So I can actually draw this resistance line right over here, there's a little bit of a resistance. Look at this, right? We touched, we came down, consolidated, and pump, right away. Could you see, guys? We actually broke above this resistance. Of course, we got a new bullish signal coming out because we actually attempted to break that horizontal resistance. Wow, we are above the trailing support. Of course, when that happened, I mean, look at this, right? The green line that was up continued to point up even more as another confirmation, right? So this is a resistance line that I've drawn, but in fact, if I can explain to you, I can actually also turn on what we call the horizontal support and resistance. Let me turn it on. There we go. Can you see, guys? There's this red line that comes out. I mean, let me just show it to you again. All right, so I can just like to pump off it, pump on it, all right, and there we go. There's this red line right over here, right? Of course, I drew it previously, but if we click on a button, we could actually turn on the horizontal support and resistance. So that's the reason why this bullish signal comes out, right? And you can see, right? So we got a bullish signal pushing up. We got another bullish signal. Let's find out again why. Maybe I can turn on the horizontal support and resistance. We can see, right? So there's a resistance right here. You can see on this day, a bullish signal came out because we attempted to break above this horizontal resistance. And you can see we started to push even higher with the 20 days moving average line pointing, from flat, it started to point up. Remember, that's step number 2, right? So step 1 is met. Step 2, the short-term trend is up as well. Step 3, in terms of a horizontal support level, is positive as well. We're above a horizontal support. Step 4, in terms of the trailing support, you can see this trailing support, well, it's still good, right? We're still above the trailing support based on this bullish signal that came out as well. So I think step 1, 2, 3, and 4 is met for this company, all right? So I think it looks pretty bullish, right? So let's then move on to step number 6 and number 7 as well. So step 5 would be where we could think about entering, right? As I say, near a trailing support, near a horizontal support, or maybe if it does break a resistance again, we see another bullish signal, well, that could be a more aggressive entry. All right, so let's move on to step number 6 and 7 very quickly. All right, very quickly, what exactly is number 6 and 7 in terms of technical analysis, right? As I mentioned, right, technical analysis, there's a lot of things. There's indicators, patterns, candlestick, price action, right? What do you do first? So I hope by watching this video, you have a clearer idea of what exactly to focus on first. 1, step 2, step 3, and you put it all together sequentially, step by step, so that you will not get confused, right? And that's where you get the what we call the highest odds of winning, all right? Because you are not just picking stocks randomly, you're picking powerful stocks, strong stocks, getting in at the right time, getting out at the right time as well, right? So step number 6 and 7 is this, right? So let me go to just turns off like maybe this signals, right? Something like this, right? So you can see it looks a little bit cleaner, and step 6 and 7 will be this little bit more advanced thing that is called volume and also candlestick, right? So essentially we want to have a strong volume if you're to see any bullish signals coming out. If you're to break a resistance, whether is it a trailing resistance or horizontal resistance, if we see strong volume actually coming out right over here or here or here, that is where we could, it gives more meaning to the move, right? It could be more powerful, all right, in terms of the upwards move. So we look at volume as well, right? As I say, guys, if you want to find a bit more, attend one of those free webinars to find out exactly how you can pull out winning stocks like this, right? And more importantly, know exactly when to buy and sell them. Attend one of those free webinars, and that's where I'll share with you guys a bit more on the entire framework, right? So step 6 will be volume. Step 7 will be this thing called candlesticks. So most people actually make the mistakes of focusing on candlesticks first, right? And I think that would be one of the biggest mistakes. Because candlestick is important, is powerful, but if you just turn on the chart and I don't know, like for example, let's say you pull out a blank chart like this, right? And we step 1 look at the candlestick, all right? And I don't know, we just pull out a chart and we just look at this day candlestick and this day, this is a powerful candlestick, right? So yeah, I mean, you can do that, but what does it mean, right? Just by looking at the candlestick, it just gives you a very small perspective of stock, right? You don't do it the first step. You can see it, right? So we want to do it, yeah, but we will do it probably in step 6 or step 7 at the back, just to get another more confirmation. So for example, if we talk about potential entry near a trailing support, so let me show you, right? Maybe near a trailing support, or maybe near a horizontal support level, right? So what if, right, we do see a bullish candlestick near a trailing support? Of course, step 1 and 2 is met as well, all right? Long-term trend, the short-term trend, the market structure, everything is good, right? We got a trailing support, good, right? And now, if we were to see like a bullish candlestick right over here, right? A bullish candlestick doji, right? Maybe some bullish spinning top right over here as we near the trailing support, right? Would that be another confirmation, right, of a potential rebound or push away from that trailing support or horizontal support? Does it make sense? And that's exactly where candlestick comes in, right? After getting the entire picture, getting the market structure, the trend, and everything, and that's where if it does, like for example, this is a pretty bullish candlestick. I think this is something like what we call a Marubozu, right? Very bullish candle, opens at the day low, went all the way up and closed somewhere at the day high, right? And based on this bullish candlestick, of course, you can see that we are above the trailing support level when that happened. And if I can turn on the bullish signal, you can see that, well, this bullish candlestick actually happens right over here when we got a bullish signal, right? And this bullish signal was because we actually broke above the horizontal resistance. Remember the more aggressive entry, so we broke a horizontal resistance, we got a bullish signal, and now we got a pretty good bullish candlestick here as well on that day. Does it make sense? So that could serve as another confirmation where we could potentially move even higher, all right? And of course, we look at volume on the day as well. If it's good, if it's strong, there's another confirmation as well. Does it make sense? All right, so all these confirmations, right? 1, 2, 3, 4, 5, 6, 7 confirmations pretty much are, like 7 ticks, all right? If you have more than 4, 5, 6, or 7 ticks, that's where you can have what we call a very perfect trade setup, all right? And the odds of winning is so much higher, or maybe the losing, right? The odds of losing is just so much, it's harder to be wrong, because if all 5, 6, 7 points are all pointing towards the upwards direction, that's what we call a confluence of factors all pointing up, all right? And just so much harder to be wrong in that sense. Does it make sense? All right, so that is pretty much step number 6 and 7. So I hope that now you have a better idea of what exactly is candlestick. And as I say, right, if you're going to find out exactly the entire one good trend strategy, or and how perhaps you could have access to an indicator like this that gives you a quick opinion in seconds, right, based on my 1GT Pro indicator. Attend one of those free webinars. All right, below, click on the link. That's where I'll share with you guys a bit more on the entire strategy, and also share with you guys how do we even pull out the top 1% of stocks in seconds before being guided on when to buy and sell based on the bullish signals, or maybe when to get out based on the bearish signal. Look at it, right? Got a bearish signal because we broke the trailing support, pump, another bearish signal, went down even more, right? So maybe to get out, if you see a bearish signal, because that would be like a break of structure, that would be a break of a trailing support, a break of a horizontal support. You want to be careful, all right? So if you want to find a bit more on the entire strategy, attend one of those free webinars, the link is right below, and I look forward to share more with you. Yep, so that's it for this video, guys. I hope you have taken note of the step-by-step, right, training on how to actually do technical analysis, right? Don't do it in a very random way. Do it in a very sequential way, step by step, and I can assure you that's where you will see results, right? Consistent profits, not just 1 day or 2 day and then up and down and like 4D like that. No, all right? That's where you can get consistent profits, because you're always focusing on the right stocks, strong stocks, and getting in on them the right way as well. And that's where, as I mentioned, there's a very high chance of winning, because you're just picking stocks that has the potential to move higher, all right? Just by following all the steps that I mentioned, right? So Joey here, thank you so much for watching. If you want to find out, as I say, I found out more about the strategy and how you could potentially make gains of like 15 to 12% gains per trade with a few trades a month, right? Attend all those free webinars, and that's where I'll share you guys my entire one good trend strategy, right? So Joey here, thank you so much for watching. I look forward to see you in the next video, even in the webinar. Take care.